Hey everyone, this is C Crypto Daily Buzz. Today is March 7th, 2026. This channel summarizes the most important crypto news for investors in Southeast Asia, including the Philippines, Vietnam, Indonesia, and OFW communities using crypto and remittance every day. Let's go through 3 key stories you should know in today's crypto market. First, Bitcoin's price action in the middle of renewed Middle East tensions. Bitcoin has fallen back below $68,000. As worries over prolonged conflict in the Middle East and surging oil prices weigh on global risk assets. Overnight, BTC dropped from the low $70K area to around $800 on major exchanges after reports of further Iranian retaliation. And a sharp 12% spike in crude oil, while US stocks also closed lower. Market analysts note that Bitcoin has recently moved more in sync with the S&P 500 again, with the correlation climbing back towards 0.7. which means macro headlines are once more a key driver of intraday moves. For investors in Southeast Asia, including traders in the Philippines and Vietnam, my view is that this environment calls for respecting macro risk. BTC can still behave like digital risk asset when global markets de-risk. It's a time to size positions according to your downside tolerance, rather than assuming Bitcoin will automatically hedge every geopolitical shock. Second, a signal that links Bitcoin risk conditions to ETF money flows. Swissblock's Bitcoin Risk Index has shown a strong negative correlation with US ETF flows since last November. When funds leave the ETFs, the index spikes and selling pressure dominates. When ETF inflows resume, the index cools down. According to their Bitcoin Vector Signal service, last week's renewed ETF inflows coincided with a noticeable drop in the risk index toward the 25 area, which historically marks a transition from heavy selling to more balanced or buyer-led markets. Conversely, during weeks of net outflows, the index jumped, reflecting more unstable conditions and stronger downside pressure on BTC. For Southeast Asia investors, including Singapore funds and Philippine family offices, I would treat this as a useful dashboard rather than a crystal ball. If ETF inflows continue, it supports a more constructive backdrop. Using ETF flow and risk index data as context around entries makes more sense. Third, a regulatory move in the US that matters for stablecoins used in global remittance. Florida has passed a state-level stablecoin law, creating a formal framework that treats certain payment stablecoins as non-securities while banning unlicensed issuance. The bill amends Florida's anti-money laundering rules to explicitly include stablecoins, requiring issuers to comply with regulations. It also states that specific categories will not be considered securities, aiming to give banks and fintechs more clarity. For investors and users in Southeast Asia, especially Filipinos, Indonesians, and OFWs who rely on USDT or USDC for remittance, this is another sign that major markets are moving toward tighter but clearer rules rather than banning stablecoins outright. Over time, that could favor regulated issuers, making compliance risk just as important as price or gas fee considerations. To sum up today's stories, Bitcoin market volatility, Swissblock's risk index, and Florida's stablecoin law are the key highlights. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. Thanks for watching C Crypto Daily Buzz, and I'll see you in the next episode.